When Bitcoin began, what the creator of Bitcoin wanted to create a cryptocurrency that basically avoided the counterparty risk that existed in the financial crash of 2008, 2009. The biggest problem that the banks had in that era when everything was crashing was counterparty risk. Banks were loaning out money to people who couldn't pay out their loans, and then there were credit default swaps the banks created in order to insure against the risk of that. And of course, so many people weren't paying their homes that you couldn't pay all of the insurance claims that existed from this rare event. It was a rare event, but it happened. And so crypto was a very brilliant idea, because it was idea we should have some kind of currency that is not subject to the credit risk of another person. For instance, if I send you a Bitcoin, it doesn't matter if I go bankrupt, you still have your Bitcoin. And it doesn't really matter if other financial institutions theoretically had a problem. If you had a Bitcoin, that would be yours, and it wouldn't be subject to really the risk that others just wouldn't be able to pay you. But of course, Wall Street didn't quite like the arrangement that existed, the original concept of a decentralized system. Decentralization was built upon being anti-fragile, eliminating a lot of the risks that exist in a traditional financial system. So it is funny that originally that was one of the biggest selling points of cryptocurrencies was, hey, let's get rid of the major risks that exist in a traditional financial system. So instead of each person holding their own key and being able to pay for items with their private crypto Bitcoin key, people started using exchanges. And this year, of course, we're seeing the exchanges are not necessarily the safest place to own or use Bitcoin, especially in a very brutal Bitcoin bear market. There's just so many problems with these exchanges. They're very opaque, even the ones that are supposedly public, and then those would be the ones that would be more responsible, like Voyager. They were doing things that most people had no clue was happening. You would use your exchange, you would sign in, and you would say, oh, it's safe, I don't have to worry about the public key, they'll take care of that, and I'll even make some extra money by lending it out. But you had no idea that they were lending out the money to very oddball hedge funds, where they would take enormous risks with the crypto. And of course, if you're taking enormous risks with leverage, it's just a matter of time before that blows up the whole system. And so once the money was gone, and some of these hedge funds like Three Arrows Capital lost the money, there really wasn't, the money was gone. People who thought they were just earning some interest, it wasn't like a savings account. So an idea that was smart, decentralization, it became over time way more risky than a centralized system where you have a bank account. I'm not really worried about my money in the bank because I have FDIC insurance, and of course, even if there was counterparty risk, I could probably look to have the most responsible banks. When it comes on to crypto nowadays, I'm not so sure that there's any crypto exchange that anyone could feel comfortable keeping their money in a very bad market, just because we don't really seem to know what they're doing with the money, especially when they have these lending programs and we don't really understand a lot of what's going on. So the sad thing is, the important lesson of 2022 is that we might actually have to, a lot of people might have to force to think about the original purpose of crypto and how it was supposed to be a decentralized system where we were supposed to limit risks and not increase our risks with leverage, counterparty risks, and opaque exchanges. It's almost like some of these crypto exchanges became worse than some of the Wall Street banks that crypto was meant to solve. So this is a really important issue that I think a lot of people are thinking about, and it actually impacted even some of the most intelligent investors out there. Like, for instance, meet Kevin. He's a prominent financial YouTuber, and I think he had invested with one of these crypto exchanges. He had financial education, Jeremy, who I mentioned in another video, and Andrew Geek had a lot of his own crypto on the Voyager. Andrew Geek, he had a lot of money in the Voyager platform. I had used Coinbase and Gemini, and so far at the moment they still seem relatively okay, but I would not be using any of these earn programs today, because they are basically lending out the money in the end to hedge funds and other financial institutions that we can't really be 100% sure what they do with the money. And as a result of that, it's very, very important to be very safe. If you could, the old logic of the early crypto people would be, it's not your keys, that's not your crypto. And maybe a lot of us should consider trying to do cold storage. I personally, the one problem I have with that is that I wouldn't want to risk my computer being hacked or losing out on a hard drive or something like that. So we have to think of ways to be as safe as possible when it comes on to crypto. But this is a lesson. The original purpose of crypto has almost been lost. It was supposed to be decentralized, and we're moving towards a more centralized and more risky environment than the one that was meant to replace. So this is something to keep in mind. So I hope this video was informative. Smash the like button, subscribe, and I'll see you in the next video.